Hello and welcome. You are in the right place. You have clicked on the FSA Outreach channel for Federal Student Aid, and we're going to talk about Fresh Start program today. Now, before we get started, you are new to this channel. If you have not subscribed already, we welcome you to join in on the community. Go ahead and hit that subscribe button. Now is the time to introduce yourselves in the chat. We're going to be here live answering questions in the chat. And this is also a time to share with other friends and family members or even colleagues who might have a defaulted federal student loan. So let's go ahead and get started and talk about this Fresh Start program that is from the Department of Education. So first things first, there are a couple things that we need to cover today that I want to make sure that you are understanding of what we're going to be talking about on this day. So today we're going to be talking about getting out of default, and we're going to explain what default is and how to get out of it with the Fresh Start initiative by the Department of Education. We'll also talk about the loan simulator, and I'll do a live demo for you so you know exactly how to select a repayment plan moving forward. And we'll also do a knowledge check. So go ahead and keep your ears open because I am going to quiz you at the end and make sure that you understand everything that's covered today. We'll close with some helpful resources and give you an opportunity to share your feedback. So first things first, let's talk about what is default. Now, the very first day after you have missed a student loan payment, your loan becomes past due. So it is exactly the first day after you have missed a student loan payment, you are known as a delinquent borrower. Now, a delinquent borrower doesn't have any penalties, but it is to alert you that, hey, you have missed a student loan payment by this specific deadline, and it's important for you to make that payment as soon as possible. Now, your federal loans do not go into default until you have failed to repay the loan in the outline of your promissory note. Now, all of you are borrowers and have signed a master promissory note, which is obligating you to make sure that you are repaying of this loan. Now, most student loans default happens after a payment has not been made in over 270 days. This is where your loans are considered to be in default status. Now, when you are in default status, there are going to be some consequences as a result of that status. So it's very important that you as a borrower understand that delinquency is not necessarily a bad thing, but it is to alert you before you get to the 270 days plus in order for you to avoid default. So if you make a payment within your delinquency status and your default status within that 270 days, then you will not reach default. This webinar today is specific for those borrowers who unfortunately did not or were not able to make a payment beyond that 270 days of delinquency. And today, there are some consequences that we want to cover today. And most importantly, we're going to talk to you, borrower, who is in default status and how to get out of it. So let's go ahead and move forward. Let's talk about getting out of default with the Fresh Start initiative. Now, before we get into how to get out of it, let's talk about some of the consequences. Because if you don't use the Fresh Start program, then you most likely will incur these consequences after September 30th. So, the very first consequence that you need to know if you are a defaulted borrower is that now your entire balance of your loan will be due. That means any interest in addition to your principal will be immediately due. So, although you were on a monthly payment plan before, now it is requiring a full payment due. Also, your credit score can be impacted. When you are in default status, it does get reported to credit bureaus and it can negatively impact your credit ratings. It's important for you, especially if you're trying to buy a home or a car or even get a new credit card. You might have some difficulties there if it is negatively impacting your credit score. The third thing that is a consequence of being in default is that you lose eligibility. Now, this eligibility is not just for being able to have a monthly repayment plan, but it also means that you won't be eligible for deferment or forbearance, and you won't be able to postpone or reduce your federal student loan payments as well. You also lose eligibility for other benefits, such as choosing a repayment plan that might be the best bet for you, and also receiving additional federal student aid if you're continuing education or if you're planning to return back to education. And you also will not be able to apply for any of the student loan forgiveness. So this is very critical for you to get out of default as a borrower so that you can take advantage of all of the benefits when it comes to federal student aid programs. And lastly, the consequence of a default is that your tax refunds and your federal benefit payments may be withheld, or they could be applied toward a repayment of your defaulted loan, which means that any tax refunds that you might have or you might be granted to you will be withheld, meaning that it will use that payment, that tax refund, towards your student loan payment instead. So these are some consequences of being a default. Now, there are some additional consequences as well, such as wage garnishment. So, this is when your employer may be required to withhold a portion of your pay in order for it to be sent to pay for your loan. So please note that this is a very possible way in which you might be getting paid in a biweekly or monthly status, however your employer deems your payment, and they actually could be taking amounts out of your paycheck in order for your student loan to be paid. Also, there could be some additional fees like court costs or collection fees or even attorney fees associated with your collection process. So, if there has to be an added process in order to collect funds from you, in order for your monthly payments or your student loan to be repaid, there could be some additional fees to that. Now, what we're talking about is a fresh start program, which is going to help you get out of default so that you can avoid all of these consequences. Now, it's important to note that this program is only eligible through September 30th. So it's really important to know that right now we are in a period where there are no consequences to being in default. And this is why it's so critical for you to be on this webinar today. Because since we have returned to repayment back in October of 2023, there has been something called an on-ramp period, which means that any missed, partial, or late payments did not have a negative reporting for your credit score, did not have any consequences with default, and there were no loans being sent or being sent to collection agencies in order for you to have your payments being repaid. So, what does that mean? That means that this Fresh Start program is extra important because after September 30th, 2024, all of these consequences of default will resume. So, although you have been protected since October 2023 up until this day of September 30th of 2024, after September 30th, these consequences will start to be instituted. Now that we know that, let's talk about what the Fresh Start program is and how you can actually start the application and benefit from it. So first things first, we want to note that Fresh Start is a one-time temporary program. Say it with me. This is a one-time temporary program. So yes, this is why I was asking you to share with your friends and family. This is why I was asking you to subscribe. This is why I was asking you and telling you that it was super important for you to be here today because this is a limited plan. That's right. You need to apply for the Fresh Start program by September 30th to make sure that all the benefits of not having the consequences of being in default continue after September 30th. So, what does this mean? This Fresh Start program allows for you to have special benefits, and that includes not having your default status reported to corrections, so credit reporting protections. It also means it clears you from any government credit reporting system. So that means any collections or collection agencies won't get your information. And it also makes you eligible for federal student aid, which means if you are planning to return back to school, you will be eligible for federal student aid funding as well. And you also can be made eligible for student loan forgiveness programs as well. So let's talk a little bit more about Fresh Start. Let's talk about which loans are eligible for Fresh Start. If you had a defaulted direct loan, that means a direct unsubsidized, a direct subsidized, or a direct plus loan, you are eligible for Fresh Start. If you have a defaulted FFEL loan, also known as our Federal Financial Education Loan, then you also are eligible. And also defaulted Perkins loans held by the Department of Education are also eligible. Now, let's take a moment here to just discuss the FFEL program loans. Now, if you had a FFEL program loan that defaulted during the COVID-19 payment pause and were taken out of default due to the COVID-19 relief, those loans are not eligible for the Fresh Start program. Please also note that these are also not eligible for the Fresh Start program. Private student loans, defaulted Perkins loans held by schools, defaulted health education assistance loans, also known as HEAL loans, student loans remaining with the Department of Justice for ongoing litigation, direct loans that are defaulted after the end of COVID-19 are also not eligible, and FFEL borrowers that have defaulted after the end of COVID-19 are also not eligible. Now let's talk about some of the benefits of getting out of Fresh Start. So one, as I already covered, access to federal student aid is probably the biggest benefit, especially if you're someone who wants to continue education, especially if you're someone who wants to complete a degree program. Being eligible for Fresh Start then also makes you have access to federal student aid again, and you can apply for any of the federal grants and additional loans. Also note you're eligible for other government loans. So that includes any government creating credit reporting system. So you may be eligible for certain types of loans like mortgages as well. It also helps you if you're trying to buy a car and or a home. Any of those will not have a negative impact to you based on your credit reporting. It also stops collections. That means you get to keep your tax refunds. Any wages will not be garnished. Any Social Security payments, they will also not be withheld. And any collection calls will end. You will stop receiving collection calls as well. So as you can see, Fresh Start has a great benefit for a lot of our defaulted borrowers. Let's continue with the benefits of Fresh Start. That's right, we're not done. So the very first thing is we will restore the ability to rehabilitate your loans. So that means that if you're not familiar with rehabilitation, if you're in default and you would like to rehabilitate your loans, meaning getting them out of default, you can only do that one time. But The Fresh Start initiative does not count as that one time. So you can do the Fresh Start program now. And let's say that you get back into default again and you would like to use the rehabilitation. You can do that, as the Fresh Start did not cancel out your ability to do the rehabilitation at a later time. Also, your credit reporting changed. So as of December of 2022, guess what? That was reported to collections as being current. So you were not in jeopardy of any negative credit reporting during that time. And you started to receive a lot of those benefits in February of 2023. They were not stated as being in collections. That will continue as well. That is a benefit of Fresh Start. You will be seen as being current on your student loan. Also, you now will have access to an income-driven repayment plan. Maybe one of the reasons why you got into default is you could not afford your repayment plan. Well, now you get to go back after your Fresh Start has been processed. You're able to now select a repayment plan that's best for you and your budget to allow for you to avoid getting into delinquency and into default again. Also, you will have access to student loan forgiveness programs. That's right. Defaulted loans are not eligible for federal student loan forgiveness programs. So if you do Fresh Start, you now gain the ability to apply for forgiveness programs. That includes PSLF as well, public service loan forgiveness. So this is a major opportunity for defaulted borrowers. We want you to go ahead and share it with your friends and family. And we also want you to take advantage of this time. Again, remember, you only have until September 30th of 2024. So how do you take advantage? I'm glad that you asked. There are 3 ways for you to apply to the Fresh Start program. So one of the ways that you can apply to the Fresh Start program is you can simply go online. You can go to myeddebt.ed.gov. Again, that is myeddebt.ed.gov. Log into your account and there you can begin the application to apply. You can also call the number on the screen. That is 1-800-621-3115. And that will allow for you to apply on the phone. We're making it easy for you that way. If you are deaf or hard of hearing, I want you to call 1-877-825-9923. Again, that number is 1-877-825-9923. And lastly, if you're not a phone person and you would rather be able to submit it via mail, you can do that as well. We need you to write a letter that includes your name, your social security number, your date of birth, and the following statement. I would like to use Fresh Start to bring my loans back into good standing. I'm going to repeat that. You are going to write a letter and it will include your full government name, the name that we will have listed associated with your account, your student loan. You're also going to include your social security number. You're also going to include your date of birth. And I want you to write this statement down, word by word. I would like to use Fresh Start to bring my loans back into good standing. Okay, so please note that these slides will be available to you. You can actually click the link in the bottom of the description box. We already have it available for you. Just go ahead and request the PDF and you will be able to go straight to this slide here. So that way, if you didn't miss it or you missed what I just said, that is okay. Go ahead and download the PDF and you will have all the information for you. You can also come back and just replay it as well, because this is on our new FSA Outreach YouTube channel. Now, once you write that letter, I want you to mail it to the U.S. Department of Education Default Resolution Group. That is at P.O. Box 5609 at Greenville, Texas, zip code 75403 5609. Again, you're going to mail this letter to the U.S. Department of Education, Default Resolution Group, P.O. Box 5609, Greenville, Texas, 75403 5609. Now, let's talk about what to expect after you enroll in Fresh Start. Your defaulted loans will be transferred. So yes, you might be with a current loan servicer. They will be transferred from the default resolution group to a federal student loan servicer. So please note that your loans are going to be transferred. You will receive a notification when they are in fact have been transferred. Your defaulted loans will be returned to in repayment status. That is correct. That means you are no longer in default and you now have an in repayment status. Your default record will be removed. Can we say that again? It will be removed from your credit report. So no longer will you have it showing on your credit report either. This default record will be removed. And your new federal loan servicer will send communications once your loan has been transferred to you. So you want to make sure that your contact information on your federal student loan is actually current and accurate. So please visit studentaid.gov/servicer just to make sure that your contact information is indeed accurate. Also, as a reminder, you want to make sure that you select an income-driven repayment plan after your Fresh Start enrollment has been processed so that you can select the best repayment plan for you based on your income and your household size. Now, you cannot, and I repeat, you cannot apply for an IDR plan while you are in the processing period. You must have finished your processing first in order for you to apply to an income-driven payment plan. Also note that if you don't actually apply for an IDR plan, you will be automatically placed on the standard repayment plan. So that standard repayment plan is a fixed monthly based on your total amount due divided up of 10 years. So it's made up of 10 years. So that way that you have completed your full payment of your student loan in 10 years. So you want to make sure that you learn the differences from your student loan repayment plans and your options. I encourage you. You can even do this today. Go to studentaid.gov/plans and you can review all the different type of income-driven repayment plans. There are 4 income-driven repayment plans that will make you eligible after your Fresh Start enrollment has been processed, and then you can select the best plan for you. Now, what if you're saying, well, Tanika, that sounds great, but I still don't know what's the best repayment plan for me because I have a certain income and a certain household size. How do I know I'm picking the right repayment plan? I am so glad you asked this question. I'm going to show you and introduce you to our loan simulator. Now, the loan simulator is very much your opportunity to help you calculate what your future student loan payment may be. Now, your loan simulator is a predictability of what your student loan payment might be in the future. And you can also choose your loan repayment option that best fits your needs and your goals. I'm going to provide a live demo right now. So let's go ahead and let me show you how to use a loan simulator so you can determine what is the best income-driven repayment plan for you. Okay, we are here. So let me show you a little bit about what you should do first. First things first, we're going to go to this website. So go ahead, log into your computer, go to studentaid.gov/loan-simulator. Okay, so that's studentaid.gov/loan-simulator right here at the top here. Now, when you come to this page, you're going to see calculate your federal student loan repayment options with Loan Simulator. That's how you know you are on the correct page. As you start to scroll down, there's going to be those three options we just saw on the previous slide. We talked about having a repayment strategy. You can also talk about struggling with my student loan payments. You can also talk about simulating borrowing more. But because you are using Fresh Start and you're going to be new back into repayment, we want to make sure that you have a proper strategy. Now, if you have a logged in account, you can log in and you can start doing this repayment strategy. But I want to make sure that you're aware that your Fresh Start application must be processed first if you're going to do the log in, because as you're logging in, it's going to take your current status from your account. If it's showing that you are in default, they're going to say that you're not eligible for any income-driven repayment plans. So in this case today, if you're going to be looking today and you want to get ahead to figure out which income repayment plan will be best for you, we're going to start from scratch today. So which of the following apply to you? You're going to be able to talk about if you have a job or plan to get one soon, if you filed taxes in the last 2 years, if you're married, if you have children or other dependents, if you are saving for retirement, we'll pay tax on it later. If I have additional taxable income, I will pay to health insurance or I contribute to a health insurance plan. So you want to select all that are eligible for you. Now, you can also skip these guided questions, or you can even select none of these apply to me as well. So it's really up to you. Let's say that you have a job or you plan to get one soon. Maybe you have a limited employment or you want to have a new job. So let's just go ahead with that for right now. It's going to ask you what state that you live in. So in this case, I'm just going to put as an example, it already populates for me. So I'm just going to put Maryland in here. You can also skip this step, but we encourage you to get the most filled out as much as you can, because this is going to be the accuracy of your monthly payment if you want to see what it is. So let's say what your yearly salary is. So if you don't have employment right now, then you will put what your yearly salary is there, or if you have a limited salary, but let's just say that ours is $45,000. How much do you expect your income to grow by each year? Let's say we give a general 3% as a default here. So you can lower that, you can put 0, you can put 1, you can put even above. Even if you're not sure, it's okay to just leave it as a 3%, as that's the general piece. So now that you're on the loan, they're asking you to add your loan. It's saying, hey, you haven't logged in yet, so we can't see which loans that you have. So here I can even add additional loans here, which we can go ahead and do that. So let's say that I have a direct subsidized loan, and I can also put what my interest rate was. So if you're familiar with this, you can go into your studentaid.gov account. If you're not sure, you can also be able to look at your latest documentation to determine what your interest rate is from your plan. So let's say that my defaulted loan is at $8,679. I'm going to save that. I might even add an additional loan. Let's say I'm adding a plus loan this time. Maybe I'm a parent and I had an interest rate of 8.05. Let's say that it was actually a 7.96 at the time. And I have a total balance of 21,479 for that loan. So now I have two loans here. I have one as a student myself. This is I have a parent, or I can add additional loans as well. But let's just give these for two examples for now. But you please insert all of your student loans that you have or that you know of so that you can put them on here. You can also log into your account after your fresh start application has been processed, and all of this will populate for you. Now, it's asking you, would you like to see repayment options if you maintain eligibility for public service loan forgiveness? So if you work for a nonprofit or even any government industry agency, that could be federal, state, regional, or even local, if that is the case, and or you're military, you might say, yes, I want to see if I'm eligible for PSLF and how my repayment options might impact that eligibility. So let's just put yes for now. And then it's going to ask me what type of organization that I work with. Again, I can work federal, I can work state, I can work local government, I can work tribal government, I can work for a 501c3 or a not-for-profit, or I can work for a not-for-profit that's not a 501c3, but does services that are related to a nonprofit organization that is acceptable service. So there's specific ones, not all are acceptable. AmeriCorps or Peace Corps or none of the above. So if I don't work for any of these currently, I can select none of the above, and then it will tell me, well, currently you're not eligible for PSLF, but if you were, it will still show which repayment options would be eligible for PSLF. But let's go ahead and say state government for right now. So then it's asking me what my primary payment goal is. So I have options here. I can pay off my loan as fast as possible, meaning I just want to get this off of me, right? So depending on what that is, I just want to pay it off. Or I can say I want to have a low monthly payment, and that repayment plan might be a 10-year repayment plan. It might be a 20-year repayment plan. It could even be a 25 repayment plan or even 30-year repayment plan. But I want to keep my payments low each month. I can select this option here. If I want to pay the lowest total amount over time, meaning interest, if interest is a big issue or you had high interest rates and you want to make sure that you are paying the lowest total amount over time, you also have that option. You can also choose my monthly payment. So that means I can even select how much I'm willing to pay, and then it will then select which repayment plans will going to be fit best for me based on my budget. So if I'm choosing what my monthly payment will be. Also, I can pay off by a certain date. Maybe there's a certain goal that you have. Maybe there's some goal to buy a house or to start a family or to get married or go on a very special vacation, right? And you want to pay off on a certain date. You can do that as well. And maybe you don't have a specific goal at all. You're just curious, right? I just want to know what's available and I can be able to kind of figure it out from there. Let's go with that one today because you might not quite be sure. Okay, so, well, it's saying, all right, so the best consolidation options, it will populate any personal information. So I already filled that out. It already pulls out all my personal information for taxes. All my loan information is already on that tab as well. So I'd be able to see that. And now we're talking about repayment goals. So they're saying, what is your repayment goal? Again, I didn't select one before. I'm just curious. So let's just start with the fastest payoff first. I'm going to apply these changes. And right below it says, if you consolidate two of your loans, assuming that you're eligible for PSLF, this will be the repayment plan with the fastest payoff. You are estimated to pay $265 per month. Okay, so it's saying that I am eligible for the ICR plan, and I also have eligibility. It tells me that I'll be able to pay at least a 32,000 over the entire process. It also tells me the amount that it could be forgiven in public service loan forgiveness if I am eligible for PSLF. It also tells me it's income based. And it also tells me when my payoff year will be. So it's a 25-year payment plan. Now, this 25 years, if you're saying, well, PSLF is only 10 years, why is it giving me 25 years? Because it needs to verify that public service loan forgiveness is something that you're eligible for. So it's just telling you this is the amount, but it's not saying that, hey, it will be covered in that 10 years because it has not been verified that you work for a public service agency yet. So it's going to give you the full 25 years of the actual plan, which puts you at May of 2034. Okay. Now, it's saying I can also compare other payment plans. So let's say I have other payment plans here that are not, I want to be very clear here, these are not income-driven repayment plans. These are other repayment plans. Now, why is that important? Because it's going to show me different monthly payments, and you might say, ooh, 185, that sounds very appealing to me. And it could very much be appealing to you. But also note, it will not be eligible for some of the things for income-driven repayment plans. So please be note, like loan forgiveness options, these plans will not be eligible for. So you want to make sure that you are being clear about the full plan. So make sure that you click on view full plan. It will tell you that it is not eligible for PSLF. It will also tell you the loan term, which is 20 years. It will also tell me which loans are eligible for this plan. And it talks about some of the advantages and disadvantages for each one. So I love this. This really helps you kind of give a great overview. And you can also click these buttons here at the top if you want to compare other plans. So again, I'm able to view any of the ones all together if I'm seeing other ones that might seem appealing to me. And it's going to give me the option to compare my plans here. And it gives you a full overview of your family size, your state, your monthly payments will be. It will also give you based on income driven versus graduated. As you can see, the interest is a lot higher. So you might say, oh, well, it was lower, but it seems that I'll actually be paying more later on a later term. So this is a good way to really be able to see that before you select your payment plans. So as you can see, the loan simulator is a great tool. I hope that you utilize it. Please go to studentaid.gov/loan-simulator and go ahead and give it a chance. All right, so let's go back to our presentation. And now it is time for your knowledge check. That's right, I told you I was going to give you a quiz. Now is the time to see how well you have retained the information from today. First question, which of the following is a benefit of enrolling in the Fresh Start program? Is it A, stop collections, including wage garnishment, withholding of Social Security payments, and withholding of tax refunds? Is it B, access to federal student aid? Is it C, access to income-driven repayment plans? Or is it D, all of the above? Now I'm going to give you time here. You got 20 seconds. 20 seconds on the clock. 10 more seconds. Put your answers in the chat. We want to see, did you get this correct? Okay, let's see if you did. The answer is D. All of the above are benefits of Fresh Start. Remember, when you enroll in Fresh Start, collections relief you currently receiving will become permanent after Fresh Start ends on September 30th. So you have to apply by September 30th to continue the relief that you are currently experiencing with no consequences to default. You can continue to have access to federal student aid. You'll be able to apply for an IDR program as well. But you must, and I repeat, you must enroll in the Fresh Start program before September 30th. So you can go ahead and do that today if you like. Question number 2, is this statement true or false? You should wait to apply for an income-driven repayment plan until your Fresh Start enrollment has finished processing. Let's see, what do you guys think? Should you wait? Is this true or false? I'm giving you guys 20 seconds. Go ahead and drop it in the chat. Let's see. Oh, you guys are doing so well. I love it. Okay, you guys are making me smile over here. The answer is true. That is correct. Your enrollment in Fresh Start must be processed first. If you begin the IDR application after enrolling in the Fresh Start, but before your enrollment has processed, you'll receive a message that you aren't eligible. So you must apply. Then, once you're enrolled in your Fresh Start program, it will update in our systems that you are now current, you are in repayment status, and you can select an IDR plan. Remember, if you don't select an IDR plan, you will automatically be put into a standard repayment plan, which is the fixed 10-year plan. Also note that your federal loan servicer will reach out to you once your loan has been transferred. So once your loan has been transferred, you'll get communications from your new loan servicer. You'll also will be able to be alerted that yes, it is time for you to select an IDR plan. All right, let's keep it going. Which of the following are options if you can't afford your monthly payment amount after you enroll in Fresh Start? It is A. Is it A, apply for an income-driven repayment plan? Is it B, check if you are eligible for student loan forgiveness? Is it C, ask your federal loan servicer about forbearance or deferment options? Or is it D, all of the above? Again, I'm giving you guys another 20 seconds. Let me see how you guys will do. Okay, we got 5 seconds left. Let's see. Ooh, this was a tricky one for some of you, and that's okay. The answer is D. All of the above are steps that you can take if you can't afford your monthly payment plan. First things first, income-driven repayment plan is probably the best. You want to calculate your monthly payment. Maybe you're saying, I can't afford my monthly payment prior, which got me into default in the first place. Well, let's create a new plan. Let's create a new strategy. Utilize that loan simulator, which I showed you today, and let's see what you can afford as your monthly payment plan. Also know that more than half of Fresh Start borrowers have a monthly payment amount of $0. Did you hear me? Half of Fresh Start borrowers have a monthly payment amount of $0. And 60% of borrowers will have a monthly payment that's less than $50. So this is why it's super important for you to select an IDR plan. That yes, that $0 will count as if you made a payment. So you want to select an IDR plan that's best for you, including our new Saving on a Valuable Education Save plan. You also will have access to student loan forgiveness, and therefore you can see if you're eligible. Maybe you've been working for a nonprofit and you unfortunately became in default right before you were eligible. And so now you're like, hey, I can be eligible again. And I want to see how long it's going to take me to get loan forgiveness. This will be great for you to also understand what that program is and any eligibility requirements. And then lastly, if all else fails, you still have the ability to do a forbearance or a deferment. So you are able to have a short-term financial bind. Maybe you are saying, hey, right now, I just need a little bit of time in order to get my financials together or to get a new job or just to make sure that I have a straight and narrow plan, then you can qualify a deferment or a forbearance, meaning that your student loans will be temporarily suspended. Now, please note there could be some pros and cons to requesting a deferment or forbearance. I encourage you to go to the website at studentaid.gov/deferment-forbearance to see all the pros and cons so that way you are best equipped. Okay, so we're going to end with some helpful resources here to close out on today. You did an excellent job on that quiz. So, some resources, fresh start. Again, I want you to look more into this program. Start your application today. You only have until September 30th of 2024. So I want you to take full advantage. Go to studentaid.gov/fresh start. And you can start. They will have a link there for you to go to the application, which is at myeddebt.ed.gov. You also can see a getting out of default page. So if you're still concerned about how all of this works, you can see at studentaid.gov/n-default. Again, the loan simulator, I did a live demo for you today. Go ahead and utilize that today and over in a couple of weeks so that you can kind of get an idea of what the best income-driven repayment plan might be for you. Or repayment plan in general if income-driven repayment plans are not the best fit. Also, you can see 6 benefits for loans in default with Fresh Start. We have new articles that's comparing your student loan repayments with the student loan calculator, and also how to avoid student loan forgiveness scams. You can also follow us on social media. We encourage you to do so on our Instagram page, on our Facebook page, on our LinkedIn page, on our YouTube page. You are here right now. If you didn't get a chance to subscribe, go ahead and hit that subscribe button now. Also, we have an FSA YouTube channel as well at Federal Student Aid. So there you can also receive information. So go ahead and subscribe to them as well. And also you can always follow us on our Twitter page. We would love your feedback. We really appreciate you attending our webinar today. We hope that this webinar was indeed very helpful for you. Go ahead and scan that QR code and let us know, was this webinar helpful for you? Did you get all the information that you had? Did all your questions get answered in the chat? If you had a question, did you want to put a comment? Whatever it might be, we want to hear from you. We thank you so much for joining us. Please continue to come back. We will have another webinar in August that really talks a little bit more about this as well. We encourage you to send this link, this recording to your family and friends. We encourage you to come back and replay it as well. And as a reminder, if you want the slides, the PDF of the slides, please click on the link down at the bottom of the description. And that's going to allow for you to be able to see all of the links, the special links that were in this webinar today, and the link to request for the PDF of the slides that will automatically be sent to you. We thank you so much for joining us. Have a wonderful day, and let's get out of default.